How low can this correction go? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. We're going to be discussing the short-term price action and of course the macro, the market data, the traditional markets, and a lot more. But the main focus of today's video is going to be the current correction. At what point will we find support? And at what point will this correction turn from being a healthy correction into a potential move towards new lows? We're going to discuss all of that today, so stick around to the end of the video. Make sure you smash the like button, hit the subscribe button, and obviously comment any questions. I do read every single comment. You can also join our Telegram channel, the second link down below. We'll get access to all of our charts, updates, videos, analysis, information, news events, and everything else in between can be found in here. You can also join our VIP channel, guys. You get specific entries, targets, stop losses, trades such as this with entries, targets, stop losses. Everything is detailed for you guys. As you can see, some huge profits being brought in the VIP channel in the last 24 hours. 171% on Ethereum just in the last 12 hours over here. Really nice to see. Also, go ahead and sign up to Bitget and trade on Bitget. Bitget is an exchange I personally use to trade, and all of our members in VIP. You can go ahead and support the YouTube channel and support me by signing up on my link down below to get 15% off your trading fees. More about that later. Let's go ahead and get into the video today. We'll start off with the market data as we usually do. So, how are we looking currently? For the month, we're down 6.42%. Now, from yesterday's video, we were down around 5.5%, so we've come down a little bit more over the last 24 hours, and it actually came down to retest our first support zone. If you've been watching the channel for quite some time now, you would know we've been discussing a pullback ever since we reached that 22,600 target, ever since we reached this major resistance zone, and our first initial target from the pullback was in fact the 21,500 support, which made up the upper resistance of the horizontal zone we had developed between the 14th and 20th of January earlier this year, guys. So that is our first retest. That is in fact our first bearish target. So we have achieved that target from our breakdown point at 26k, guys. We saw a nice 5-6% rally toward the downside from there. Moving on to volatility, we can see volatility has now risen up a little bit as the price action again has sped up a bit. And we did say we would expect to see some volatility increase in the markets if 22.6 to 22.5k was lost, and that is what we saw. Moving on to liquidations, guys, it has been a little bit more choppy, but again, it is much more in favors of the longs being liquidated here, as the price did tumble quite fast, and it has been pushing down ever since, ever so slightly. We are seeing a little bit of short liquidations as people try to catch these bounce points, but again, there was no need to try catch any bounce on the way down until we reach this current zone we'll be looking at today. Moving on to the traditional markets, the DXY has in fact broken out of that bull flag formation we talked about yesterday. So far, it hasn't moved up too much. We haven't even created a new local high. The markets are closed right now. Will be very interesting to see what happens in the market open. The main level we do need to start clearing, guys, is going to that local low support zone that we developed within that range. So we're basically right in that resistance zone now, right now. If we do push through that resistance over here, the markets are going to continue to fall. Bitcoin will continue to fall. Traditional markets will continue to fall. However, guys, if it does reject from this level, this could be indicating that 21.5k is going to be the confirmed bounce point for this correction, meaning we'll most likely not go any lower. Again, it is something we cannot tell you right now from the DXY. We analyzed the charts today, but according to the DXY, we can't say for sure because again, the markets are closed. Going off of structural analysis, we have actually just broken out the bull flag, which gives us some positive momentum and an inclination that we are going to continue upwards. But again, we do have to wait and see what happens there. Moving on to the Dow Jones, not too much, guys. We are still pushing sideways in that horizontal consolidation. There's symmetrical triangle consolidation over here. Lower highs, higher lows, pushing sideways, neutral pattern. A one-day candle breakout from above or below will determine the directional move. Targeting 35,000, 36,000, targeting 33,000, 32,000 based on our directional move. Moving on to the S&P 500, you can see it has come down to retest support just as where Bitcoin is at support. So as you now know, guys, the market is at support. The DXY is at resistance, Bitcoin is rejected, now at support, and the S&P 500 is also at support. And therefore, we do have to be looking at potential reversals on the smaller time frame, developing around 21,500 as it could be a bouncing point. Again, nothing, I don't really expect anything to happen over the weekend. I don't think we're going to see anything more than consolidation, as we've already said. I think the next move is going to occur next week when the markets open and we either get that breakdown over here or get that push upwards and continuation. Looking at bond yields have obviously risen upwards, which could be an inclination that the DXY is in fact going to continue upwards, which will be bearish to the market. So there is some conflicting data over there, and it is data for both sides. Let's go ahead and jump into Bitcoin. A quick summary of what has occurred. We saw a breakout, guys, of our falling wedge structure. We're pushed into this resistance zone over here. While in this resistance zone, we saw decreasing momentum, velocity, speed, and volume. Obviously, all of this indicating a massive rejection is incoming. We saw that rejection with the trigger point being 22,600, 22,500. Losing that level, entering our lower volume range over here, allowed the price to move with increased speed and velocity, pushing it all the way back down to our next support line sitting at 21,500. Very simple stuff, guys. If you're watching people who didn't see this coming or wasn't even talking about it, they're clearly looking at the data from a biased standpoint of view. It was very objective. It was very simple. In fact, we saw decreasing volume and momentum at major resistance. It's pretty obvious where it's going to be going from that point. Moving down, guys, where are we going next? So if we do lose the support level, our lower support targets are in fact 20,800, 20,100, and 19,500. Those are going to be the lower supports on the way down. So let's talk about the probability of a bounce here. Let's do a short-term tech analysis and then do a macro tech analysis and discuss what would be the implications of Bitcoin dropping lower, how would this affect the macro chart, and what data do we have that points towards a continuation down / what data do we have that points towards a macro continuation upwards. So let's go ahead and dive into the smaller time frame. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. On the hourly chart, guys, you can already see a similar pattern occurring over here. We have lower highs and lower lows. Obviously, this is representing a downtrend. However, the downtrend is starting to consolidate. We are starting to see a decrease in momentum, a decrease in speed, and a decrease in velocity of the downtrend as we approach consolidation. This was expected. Remember, guys, as we enter higher historical trading volume ranges, increasing VRPV, we do expect the speed and velocity of the price action to slow down. As speed and velocity of price action slows down, we generally start to see consolidation. If we see that moving into a support range, the probability support will be held is greater. Okay, so the short-term trend again is still very much down, but we do have potential to reverse here. So let's go ahead and do a structural analysis on an even smaller time frame. So what we are seeing here, let's go ahead and draw in our trend lines. We have our downward trending support. This is, of course, this trend line over here representing at least 4 touches on a downside, which is very nice to see. And we have our downward trending resistance on the upside over here, representing at least 2 trend touches between those bottom 10 trend touches. So what we can see over here is a descending channel formation. A descending channel formation attached to a large flagpole at the top. You could almost call this an inverted bull flag. This is generally called a descending channel formation. This, of course, is a reversal structure. Waiting for a break out of this reversal structure and a crossover at 50 EMA will be the trigger for a continuation upwards. Where can the price go on the short term upwards? We can see a bounce up to these local highs, $22,081, or as high as 22,300 on the upside, guys. Now, That is the most likely scenario. For the short term, the most likely scenario right now is a small bounce at 21,500 that will take us to 22 or mid 22 level before a continuation back down. Okay, so we are expecting a break upwards here on the smaller time frame. It can continue upwards to reach these targets where we're most likely going to get rejected again and continue back down. Looking at the RSI, guys, we obviously have rising momentum and we have decreasing price. This is of course a bullish divergence appearing on the RSI, signifying once more our momentum is starting to slowly shift to a more positive scenario which could facilitate this bounce at support. Now, if we do happen to lose this level, if we do happen to break through 21,500, we will expect a continuation downward towards 20,800. Okay, this range over here, we do expect it to be filled quite fast. So 21,500 loss will take us to 20,800, and again vice versa, losing 20,600. So the lower support of this range over here will inevitably result in a continued crash toward the downside. So what is the major point on a chart in which we cannot lose? If we do lose this point, we'll be flipping macro bearish again right now, okay? I want to drill this in. Currently, we are not macro bullish. We are not macro bearish. We are very much neutral, okay? We broke out of our bearish trend. Our bearish trend was the macro descending channel. This was our bearish trend, okay? We broke out of it. We broke out of it as we broke out and facilitated, or should I say developed, a falling wedge structure moving in and out of that macro descending channel. So the macro descending channel was broken. The falling wedge structure was a reversal structure that allowed the price to push above and through that macro descending channel and ended up moving into a macro reversal. However, that macro reversal has not had enough strength to move us into a macro uptrend, which now you would know would start above 25,000. The reason why we're looking for a macro uptrend above 25,000 is because not only do we have the 50 EMA guys on the monthly chart resistance at 24,300, which is another trigger, but we have the 200 week SMA, 200 week moving average guys sitting at 25,000, as well as that Gaussian channel descending trend line here on that Gaussian channel, the bottom line of resistance at 25,000. So 25,000 is the point of which, from a technical standpoint, and of course a structural standpoint with the local high printing here in August 2022, is going to be the point of which we need to break above to see a macro uptrend develop. We are not, however, in a macro downtrend anymore, since we did reverse out of a macro reversal structure. Therefore, we're very much neutral. However, the trend on the macro is still not positive. I want to really make sure, guys, you know this. The trend on the macro is still not positive. According to a 4-year cycle, we have bottomed out. According to the 4-year cycle, we are now out of the bear market, but we are not in a macro uptrend and we are not in a bull market yet. We're in this middle phase where the price action is seeing if it can gain the strength to turn this reversal into an uptrend, or if it fails, it will reject and continue to a new low. So at what point are we concerned about a new low happening? That is going to be the loss of 19,188, 19,200-ish major POC level on the macro chart. This is of course the strongest point of historical resistance on the Bitcoin chart we have as of now, guys. So that is the point we're looking for. You can see it over here, that 19,200 level on the macro chart, the VRPV. Losing that level will be a trigger for a continuation to push down and through this range. Where will Bitcoin go if that happens, guys? We're looking at the same targets we were looking before. We're looking at anywhere between 13,900 guys to, I think it was 12,000. So we'll go ahead, 13,900 to 12,000 to see that huge jump over here on the VRPV. Again, this signifies, again, decreasing historical volume, increasing historical volume, and a massive jump in historical volume. What does that tell you? It tells you that we're going to be dropping through this level quickly. We'll be consolidating and losing momentum in this level, and we have massive support at 12,000. So the price action will go quickly below this level here, move slowly through 14 to 12K, where we'll most likely find resistance, support at 12,000. So again, if we do lose that 19,200 trigger, I will be expecting a push toward $14,000 to $12,000 on the Bitcoin chart. However, guys, if we do break above the 25,000 level, that will confirm the macro uptrend is initiated as per the 4-year cycle. We can expect the price to rise and break through a monthly candle of 29,000 to 30,000, triggering the next bull market starting. Okay, according to a 4-year cycle here, guys, you can see every single time we close a monthly candle below this prior bull market lows, we generally continue upwards into a macro uptrend, okay, and the bull market starts soon after. The bull market starts when we cross the baseline on the monthly chart on the Ichimoku cloud, which happens to be around 17 to 16 bars after the bear market bottom, indicated by that green line over here, which will take the bull market to October 2025, starting averagely around April 2024, okay? Let's go ahead and take another look at the technicals, guys, on this macro chart and a smaller time frame. So we'll start off with the trend analysis, guys, really quickly on this chart over here. If we go ahead and invert the chart, it can change our perspective a little bit of what is going on. So inverting the chart can give you another perspective. This is, of course, a 4-hour chart, the breakdown that just occurred at a major resistance. Invert the chart, look at the price action. What would you expect to happen here? We are approaching major resistance, or which is now major support. We are in a bearish consolidation, okay, which obviously you would know if we do invert it, it's going to be bullish. I'm just saying the inverse is bearish, okay? We are losing momentum, okay? We are losing velocity. We are consolidating, compressing. What is the probability we ignore that and push through? It is unlikely, right? It is less likely that we directly break below 21,500 initially without some sort of consolidation downwards, retest, and continuation upwards. This downtrend is very much in play, guys. This is our downward trending resistance. This is our downtrend, okay? This is our downtrending line right here. As you can see, as long as we don't break this downtrending resistance line, this trend line, we are still very much in a downtrend. So what could happen, like I said before, we consolidate, we push upwards, and we continue back down. That is a very real possibility. Unless we break that downtrend, we are not looking for any sort of continuation upwards, and we're very much on that downward trend for the 4-hour, daily, weekly, monthly, etc., etc. Okay, guys, I'm going to leave the video there. If you've got any questions, leave them down below. Again, there really isn't too much to discuss on weekends. We do have to wait for the markets to open up to really see what direction the market's going to take. But with that being said, I hope you did enjoy today's video, and I'll see you guys in the next one, which will be tomorrow. Now go ahead and sign up to the Crypto Academy course. You can learn how to trade, learn how to analyze charts just as I do. We'll teach you everything from charting, analysis, trading, market psychology, strategies, risk management, and so much more. Go ahead and sign up. You won't regret it. All the information can be found in our email if you go ahead and email us. See you later.